Barron's Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Howe, in for Jack Otter. Coming up, 50 years of astronomical returns. One firm is helping our heroes retire comfortably with a pension fund that has grown from the millions to the billions. Then, it could be a bumpy road for the car industry as the New York Auto Show kicks off. We'll look at what companies are doing to stay relevant and which car makers are racing ahead. And later, what's behind the Trump truth social mania and as its stock soars in the first week of trading? But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Jacob Sonnenschein, and Megan Leonard. Ben, stellar quarter for the stock market, but a mixed week this past week. What were you seeing?
I was seeing a rotation, not the kind of rotation you do with your car and the tires, but a rotation out of the stocks that everybody loved and were the big winners and into the ones that kind of stunk. And so we saw the S&P 500 this past week and went up a little bit. The NASDAQ went down a little bit, and then the Dow was the big winner. Things like Nvidia, Meta, Microsoft, they were actually down quite a bit this week. And you had things like utilities, small caps, and banks went higher.
You say stuff that stunk is working. Tell me about something that stunk that we should be thinking about buying right now.
I think about miners, particularly one that Andrew Barry had picked a couple weeks ago, Anglo American. It makes copper along with other things. But right now, Nvidia has come out and said that they're going to be using more copper. And we know that energy is going to be a huge thing for AI, and that's going to require more copper. So these copper miners, they haven't done very well. But if copper prices start going up because of demand, they're going to do quite well.
Earnings reporting season coming up. Try to contain your enthusiasm. The estimate for first quarter growth is 3%. For the full year, though, it's 11%. Is that realistic?
It's realistic. It's a little bit risky. I mean, they have to come through with a real acceleration in the latter half of the year. I think the one thing that makes it possible is that you've had a lot of companies who haven't had much earnings growth. And if they pick up and they add to what the big tech companies have been doing, you can hit those numbers.
And what should we be watching in the week ahead?
I'm looking at payrolls. So expecting about 180,000 new jobs added in March. If it comes in around that number, it should be good for the market.
Making a tragic bridge collapse in Baltimore, beyond the loss of life. Tell us about the economic effects.
Well, I think you really have to key in on the idea that the Port of Baltimore has suspended operations. And so that is key for all of this and how things play out sector by sector. So, for example, Baltimore is actually contains the larger share of vehicle imports. Now, granted, most of our vehicles do come over the border from Canada and Mexico. So the idea that this is going to impact inflation is probably negligible on autos. But things like, construction costs could be at risk. Keep in mind, gypsum, lumber, definitely key components of this port. Things like coal markets could also be impacted. That's on the export side, actually. So we do actually see a decent amount of exports coming through the Baltimore port on coal. Of course, we're not even just talking about imports and exports. Think about the cruise industry. So cruises do actually use the Port of Baltimore, both Carnival and Royal Caribbean. Now, Carnival has actually said that they may see something in the neighborhood of a 10% or a 10 million hit when it comes to their operations there.
Will we notice the effects of this on a national level if we're talking about measures like inflation?
So I think it's unlikely that consumers are really going to see the ripple effects of the Key Bridge collapse when it shows up in major inflation indicators like CPI. But shipping operations also have become a little bit more nimble and resilient since the pandemic, and that's definitely going to help out the situation. Keep in mind that this is one port. Shipping operators are really dealing with many, many issues across the globe, things like the Red Sea disruptions, obviously even water levels in the Panama Canal. So this is something that is going to be critical to watch for sure, but we actually could see bigger disruptions later this year when we sit there and see longshoremen potentially strike on both the East Coast and the Gulf ports.
Got it. Jacob, traders have gone, I think it's fair to say, cuckoo for cocoa. You wrote this past week that cocoa is now more expensive than copper. Should I be locking in capital gains on those chocolate bunnies I bought for my kids for Easter? And more importantly, what is behind this price run-up for cocoa?
It's very simple. You should absolutely be locking in those gains. Price of cocoa has tripled roughly since the bottom in 2023. The big issue is most of the supply comes out of West Africa, where there have recently been viruses. Well, there's been a virus, but there's also been wildfires and other weather issues. It's literally ruining the cocoa beans and therefore restricting the supply. And then there's this component of the move up in cocoa prices where people are just speculating. So I don't think it can go on much longer.
So Hershey has to be hurting from this. You say it's a good time for investors to consider the stock. Why?
Yeah, so first of all, the assumption from the market right now is that Hershey's profit margins have to come down a little bit. That really hurts earnings. But guess what? The minute cocoa prices start coming down, and I think they have to come down, the market's going to go, oh, margins are fine, the stock's going to move back higher.
And long term, beyond the cocoa volatility, what do you think of the business in general as an investor?
Yeah, so meanwhile, the business has operated really well. The stock's only down because of these macro issues.
Not just chocolate bars, we should point out. Well, you got your Kit Kat, you got your Reese's. Help me out here.
Great salty snacks, Skinny Pop, and pretzels. The U.S. business is really stable. You're getting some pricing in the U.S. and internationally, less than $2 billion of sales for Hershey. They can expand a little bit there.
And salty snacks gaining share from sweet snacks. I thought I read that somewhere. Well, I see cross promotions, everything becoming everything else right now. Reese's, popcorn, this clumped with that.
Chocolate in pretzels with salty sweet combo. That's a sentence that doesn't make much sense, but it's a very good seller the last year or so.
It's making sense to me. Thank you all. Tampa is home to one of the world's largest retirement communities, and the city's first responders are thriving in their golden years thanks to one management company helping to grow their pension fund by the billions. Investing expert Jay Bowen joins me with his approach and tech stocks he favors. Next. Pension funds around the U.S. are suffering from persistent underfunding, but that's not the case for some of Florida's retiring first responders. Tampa's firefighter and police fund was up more than 21% over the last 12 months, and the plan's value is now over $2.9 billion. That's thanks to the success of their sole management company, Bowen Haynes, over the past 50 years. The company's president and CIO, Jay Bowen, joins me now. Jay, I hear mutual fund managers bragging about their 1 year, their 3 year, their 5 year. Yours is more like the 5 year, the 10 year, the 20 year, and you've been at it for 50 years. How are you outperforming over such a long time period? Spill all of your secrets.
Okay, well, it's great to be here. And I wish I could provide you with something more dynamic and provocative in terms of our style and approach, but it's really quite boring.
Lay it on me.
At least somewhat boring. Top down, high quality, thematic, long term, balanced with an emphasis on equities. Interestingly, no alternatives, no pooled funds, no hedge funds, no private equity. We like to say that we're unconventionally conventional.
Let's talk about some of the stocks that you like. You mentioned top down. One of the themes you like is what's called the fourth industrial revolution. Tell me what you mean by that, and how does Honeywell fit into it?
Right. This fourth industrial revolution has been, we salivate at theme from a top-down standpoint. We really salivate when we get the opportunity to have a big mega theme like this with several investable trends. One of them, like you say, is this fourth industrial revolution. And it touches a whole variety of industries and companies, from the industrial sector to the healthcare sector to the financial sector. Honeywell in particular, it's a play on industrial automation. And there's quite a ramp in capital spending in industrial automation, industrial power management, and Honeywell is one of the leaders. We like finding these companies that we call technology companies disguised as industrial companies, and Honeywell would fit into that category.
Two more like that, Eaton and Teledyne. What do you like about those?
Right, and Eaton would be more play on industrial power management. Again, technically an industrial company, but very sophisticated from a technology standpoint. And there's a big ramp up, like I say, in capital spending on upgrading the grid, on power management. So that's a play on that theme. The Teledyne Very interesting company, I think, from a valuation standpoint right now. It looks quite good, relatively speaking, the best it's looked in several years. They make, again, very sophisticated technology products for industrial growth markets, instrumentation, aerospace and defense, digital imaging. Very strong balance sheet, very strong free cash flow, really attractive earnings prospects looking out.
And I understand you're bullish on financials in general and American Express in particular. Tell me about both.
Right. Very impressed with it. The financial thing would play into a couple of broader themes that we're looking at from the market standpoint for the balance of the year. I think you've got a shift in priorities in a couple of key areas. The Fed, number one, I think they're going to be shifting more towards preserving and protecting the business cycle away from the inflation story. American Express, very strong momentum. I was really impressed with their last earnings report in terms of they raised guidance, strong double-digit growth, top end, bottom line they're looking for. The products, and it's a very strong financial
Bringing in
company.
young customers, too.
Very strong financial company, superior credit quality. 60% of new card members last year were millennials and Gen Z. So very interesting, and doing very well in Japan also, which is powerful.
Interesting. Thank you, Jay Bowen. Next up, highlights of this weekend's New York Auto Show and why one car stock is outperforming Tesla by nearly 100 percentage points. Stay right there. The New York Auto Show kicks off this weekend, and there are signs that it's going to be a bumpy road for the car industry. Electric vehicle growth has sharply slowed, and soaring prices have cut into affordability. But innovation and technology are still racing ahead. Barron's senior writer Al Root joins the panel. Al, I know you had a dentist appointment just before this that you couldn't move, and you say you have a numb tongue. Who needs a tongue for television? Thank you for joining us. And I know that you went to a sneak peek of the car show. Tell us what you saw.
Yep.
What themes stood out?
Yep, went over to the Javits Center in New York. I think 2 or 3 things really stand out. One, you talk about this bumpy road, and electric vehicles, the growth is slowed, but there's still plenty of electric vehicles. Many automakers are showing them off. Porsche has a new one. Honda has a new one. General Motors is showing them. So the auto industry hasn't abandoned electrification, but I think a broader theme is, this idea of something for everyone. So if you want a hybrid, we'll sell you that. If you want a conventional car, the industry will sell you that. And then if you want all electric vehicles, the options are proliferating. And for the industry or for the stocks, one of the things this means is there are so many technologies competing right now. It makes it one of the most difficult times to manage your portfolio for a car company that I can remember in my history covering the industry.
So is it your sense that companies have the right mix of vehicles for customers right now, or you think they're too electric heavy at this moment?
Well, I'll answer the mix question in 2 ways. I don't think they have the right mix necessarily, because as we've pointed out many times, all of these electric vehicles, the vast majority of them are sort of luxury electric vehicles or plus 50,000. I sat in one that a new Polestar that starts, and nicely equipped one will be in the $60,000 to $70,000 range. Sat in a Lotus that's going to be in the $70,000, $80,000 range. The luxury EV market is pretty saturated. And from a mix perspective, you'd love to see lower priced electric vehicles. Now, that being said, a company like Ford, they'll have hybrids, electric vehicles, and gasoline powered engines. So their mix is pretty good. A Toyota,
Hey, Al.
mostly just hybrids and ICE vehicles, but that's sort of the road that they've chosen.
Al, what if luxury, that's too cheap for me? What if I got a lot more money to spend and I want something really, really cool? What should I be? What did you see there that I should be looking at?
Okay, the at the show this year there'll be the Rimac Nerva, all electric, $2.2 million, Ben. However, cars that expensive, it's only like 150 that are going to be made, so get your order in soon. If you don't want to spend $2.2 million, just go to Ford and you can plop $300,000 for basically the street legal race car, the Mustang GTD. which I think is pretty cool.
You know, Al, I've been seeing a lot of the commercials for the Volkswagen bus making a comeback. What did you get to drive it or see it at the auto show this weekend?
That's the highlight of the show for me. I got to drive in it. They wouldn't let me behind the wheel, probably smart. You know what? I think it's a great vehicle. And this actually starts to address some of that mix question. It's a totally different form factor. You know, maybe it won't be popular, maybe it will be popular. I kind of like it, but it is true 3-row seating. You can comfortably, there's the tongue, seat 7 people in this. Very quiet, nice features. And I got to tell you, like, so driving crosstown in Manhattan, so you go 30-minute test drive, of course, went about a mile in that. So many people stopping to take pictures, so many people asking, you know, what is this? You know, is this available for sale yet? It'll be available for sale in the U.S. later this year.
Al, was there anything from the car show that made you come away bullish on EVs and think about Tesla?
Well, I mean, you guys know I tend to be bullish on EVs. Now, we're way past the hype cycle at 21 and 22 when Tesla was worth, you know, all of the other automakers combined with its plus $1 trillion valuation. The industry is still very focused on electrification. There's regulatory pressures. There's also, you know, total cost of ownership. They're good vehicles. From a Tesla perspective, so that's good that the industry still goes down and still believes in electrification, that these things can be 30-40% of the market. That's good. What the concern is Tesla's product lineup is getting progressively older relative to the competition. And also, there's no really cheap EV. That's a problem for Tesla, just like everybody else.
Al, Toyota has raced ahead of Tesla by almost 100 percentage points over the past year because those people who are pulling back on EV growth, they want hybrids. Everybody's buying hybrids, and Toyota has tons of them. Do you think this outperformance for Toyota can continue?
So, you know, I'm wary of buying any cyclical stock, and Toyota fits in that at sort of its all-time high because I feel like it's due for a pullback. But so stock is one thing, but to your point on hybrids, you know, hybrids are having a very good year, and I think part of the issue is all of this talk of electrification. You go into a dealership, the EV is too expensive. You look at the hybrid option, it's cheaper, and you don't have some of those range concerns. I feel like the EV battery people helped hybrids have a nice renaissance in the U.S.
The numb tongue couldn't hold you down, Al. Thank you. Ben and Jacob have a pair of investment ideas, and Megan will take a closer look at what's behind Trump's truth social mania. Stay right there. Megan, something called Trump Media and Technology Group had its stock market debut this past week, and the price soared. Tell us about that.
Something? As if we don't know about Trump Media.
You might have heard of it.
Yeah. Might have heard of it. Yeah, actually, the debut went really well. You know, roughly speaking, stock's been soaring since the shareholders voted to approve the debut on Monday, the 26th. So this is very exciting. Obviously, you know, it's interesting. Despite the optimism from the debut, analysts and others have certainly started to refer to this as a little bit of a meme stock. Now, I know we tossed that name.
Say meme. Is there no chance that the stock market is right about this? Maybe it's the next Twitter, the next big thing.
It's tough. The fundamentals are just not there. Trump Media, which operates the True Social site and the app, is really a tiny company. I mean, it only has revenues of just over $3 million. And unfortunately, in the first 9 months of 2023, it had a net loss of $50 million. So really, we're looking at this and saying, gosh, Now, I will say, you know, it's interesting because we say, okay, well, it's a loss. Everyone does losses. But even in the prospectus, the folks say that they expect to continue incurring operating losses for the foreseeable future. And they said it's not clear the company is a continuing going concern.
All right, Ben, if we're not buying that one, give us something we should take a look at.
Well, if I'm going to be speculating, I think I'd rather speculate in Bitcoin.
Okay.
But really, I'm looking at Adobe. This is a stock that has been knocked down a bit because people are worried that it's not going to be able to compete in an AI world. They just had an AI summit. They're actually targeting some things that are going to hopefully bring in some money. If it holds around $500, it's looking pretty good.
Jacob, how about a stock pick?
NXPI Semiconductor, they sell chips to autos and others, and the stock has been really, really strong for a little while, but it's actually cheaper than the S&P 500, and guess what? The company, in the face of weakness in the auto sector, has reined in inventory really well. That's keeping margins not declining too much. Long term, every chip that they sell to an automaker is more valuable than other chips. Margins go up, earnings goes up. NXP, I think, has a long runway.
Interesting idea. Ben, Jacob, Megan, great ideas, and thank you. This week marked 1 year since Wall Street Journal reporter Evan Gershkovich was wrongly detained in Russia. We hope you'll support Evan's release. On social media, please use the hashtag #IStandWithEvan. To read more, check out this week's edition at barrons.com. That's all for us. See you next week on Barron's Roundtable.